Hello everyone, it's Wednesday, August 12th, and today we will analyze the charts for the euro and the British pound to identify potential market trajectories. The situation remains relatively unchanged. Yesterday, volatility was limited to about 15 pips throughout the day, which constrained traders' activity. Pressure on the euro is intensifying, especially with the upcoming release of crucial US inflation data. The same can be said for sterling. However, it still has a chance to regain upward momentum while the euro currently finds itself in a more challenging position. On Tuesday, traders received data regarding US existing home sales, which dipped by 1.7% in July. Nevertheless, the National Association of Realtors indicated that the decline should be viewed within the context of the overall market resilience, suggesting that there is nothing alarming about this slowdown. Notably, home sales are up 2.4% year to date, indicating fairly robust conditions in the real estate sector. The dollar's reaction to the report was muted as the data generally met analysts' expectations. Today's macroeconomic calendar features consumer price data from Germany and Italy. The final German consumer price index is estimated to have increased by 0.8% in July. If the reading aligns with or exceeds consensus expectations, it may intensify pressure on the European Central Bank, potentially prompting further monetary policy tightening, which could bolster the euro. Later in the day, attention will shift to US inflation data. Economists project that the US CPI for July rose by a modest 0.1% month-over-month and increased by 3.4% year-over-year, slowing down from the 3.5% in June. Notably, monthly inflation had eased by 0.4% in June after the United States and Iran signed a memorandum of understanding in a bid to reopen the Strait of Hormuz for oil and gas shipping. However, the current geopolitical landscape remains tense, with ongoing hostilities and no new agreements, which suggests that inflation may remain elevated, presenting a greater challenge for the Federal Reserve. It is worth noting that the three hawkish members of the committee are already advocating for aggressive interest rate hikes, making today's report particularly significant. As for core consumer prices, the annual July figure is projected to drop from 2.6% to 2.5%, while the monthly increase is expected to be around 0.2%. If the data deviates significantly from expectations and reveals rising inflationary pressures, the dollar could experience strong upward momentum, potentially leading to losses for the euro and pound. Conversely, if the results are generally in line with forecasts, market volatility may remain subdued, with currency pairs remaining range-bound. Now let's proceed with the technical analysis. On the 1-hour EUR/USD chart, a false breakout at 15.19 could generate a buy signal, potentially driving the price up to 15.49. A break in consolidation about this level could bring the euro further up to 15.79, potentially extending the rally toward 1.1614, particularly if the upcoming data indicates easing inflation pressures. At this level, I would recommend going short on the rebound, targeting a move of 30-35 pips. Sell entries at 15.49 and 15.79 may be appropriate following a false breakout. Bears would like target 15.19. If the price breaks below this level, the euro could slide to 15.02 and then extend weakness to 14.82. At this level, it would be wise to consider long positions on the rebound, aiming for an intraday correction of 15-20 pips. Long entries at 15.02 and 15.19 should only be pursued if a false breakout occurs. Meanwhile, the British pound retains a bullish bias, though it remains in a consolidation phase. A break above 35.27 could bring sterling up to 35.54, which would open the door to 35.81. At this level, traders are advised to go short on a rebound, counting on a 25-30 pip move. Short positions at 35.27 and 1.3554 should be considered following a false breakout. For bulls, the key level to defend is 34.92. A false breakout at this mark could generate a buy signal, driving sterling up to at least 1.3527. However, if the price breaks below 34.92, the pound-dollar pair could dip to 34.65, potentially extending losses to 34.35. At this level, it would be prudent to go long on a rebound, targeting a move of 25-30 pips. Buy entries at 34.65 and 34.92 are only justified on a false breakout. Best of luck!